2023 to 2024, Canada exported $3.7 billion worth of total potato products. Of that total, $2.7 billion was specifically frozen French fries. Where did those fries go? 91%, $2.4 billion worth went to the United States. That represents the single largest bilateral food trade relationship most Americans have never heard of, but depend on daily. Break that down further, and the numbers become even more striking. Canada also exported $50 million in seed potatoes. 96% went to the United States. $493 million in fresh potatoes. 93% went to the United States. The pattern is consistent across every category. Canada produces and America buys. But the flow is not just one direction. The United States also imports potato products from Canada to the tune of $456 million annually. 85% of total United States potato imports come from Canada. Of that amount, $440 million is processed potatoes, including $126 million specifically for frozen French fries. Here is what those numbers mean in practical terms. The United States potato industry and Canadian potato industry are not separate entities competing against each other. They are deeply integrated parts of a single North American supply chain where Canada specializes in certain varieties and processing while the United States focuses on others. And Trump is about to blow up that integration with tariffs. Canada produced 5.8 million metric tons of potatoes in 2024. That production is distributed across the country, 34% in Atlantic Canada, 19% in Central Canada, and 48% in the Prairie provinces, primarily Alberta and Manitoba. Those Prairie provinces matter enormously for frozen potato products. Alberta accounts for 24% of total Canadian potato production. Manitoba contributes 21%. Prince Edward Island adds 20%. New Brunswick provides 13%. Quebec, another 12%. Ontario, 7%. But here is the critical detail. Approximately 69% of total Canadian potato production in 2024 was destined for the processing sector, meaning frozen fries, chips, and other processed products. Only 20% went to the fresh table market, 11% for seed. The main French fry processing provinces by volume are Alberta, Manitoba, New Brunswick, and Prince Edward Island. These regions have massive processing facilities operated by three companies: McCain Foods, Simplot, and Cavendish Farms. Over the last 7 years, these three companies invested hundreds of millions of dollars into expansions and new processing plants in Alberta and Manitoba specifically. Why? Because demand for frozen potato products was surging from United States quick service restaurants, and they needed more capacity to meet that demand. That investment created the production capacity that now feeds American fast food chains, but it also created leverage. Because if Canadian processors decide American markets are too unstable due to Trump's tariff threats, they can redirect that capacity to serve other customers. And American fast food chains cannot easily replace millions of metric tons of frozen potato supply. Trump threatened 25% tariffs on frozen, fresh, and seed potatoes from Canada. For an industry operating on thin margins where transportation, energy, and labor costs are already substantial, 25% tariffs would be catastrophic. But the real damage is not just the tariff itself. The real damage is the uncertainty. When processors do not know if tariffs will be 10%, 25%, or 50% next month, when they do not know if Trump will cancel negotiations over a television advertisement, when they cannot count on stable access to American markets, they start making different business decisions. And that is exactly what is happening. According to reporting from the Western Producer in April 2025, potato processors told farmers they need fewer potatoes for 2025. Contract negotiations reflect volume decreases driven by trade uncertainty. Yes, there are other factors. French fry demand has shown some softness recently. Processors are dealing with surplus potatoes from 2024 harvests. But the tariff uncertainty is forcing processors to reduce their exposure to American markets at exactly the wrong time for United States fast food chains. Because while demand may be soft temporarily, the long-term trend is clear. North American frozen potato consumption is projected to grow at 1.5% annually through 2035, reaching 3.8 million tons. The United States alone consumed 2.8 million tons of frozen potatoes in 2024, 88% of total North American consumption. That demand is not disappearing, but the supply to meet it is being reconsidered because Trump made American markets unpredictable. So if Canadian processors are reducing volumes for American contracts, where is the supply going instead? The answer is exactly where you would expect: Asia. Canada exported 1.4 million tons of frozen potato products globally in 2024. While the United States remains the largest destination by far, Japan is already the second largest market for Canadian frozen potatoes. South Korea, Taiwan, the Philippines, and other Asian nations represent growing demand. As middle-class populations expand across Asia, demand for Western-style fast food increases. That means demand for frozen French fries that meet quick-service restaurant standards. Canadian processors already have relationships with Asian buyers. They already understand the quality requirements. What they needed was a reason to prioritize Asian sales over American contracts. Trump gave them that reason. Every time he threatens tariffs, every time he creates chaos, every time he demonstrates that American markets cannot be counted on for stable long-term partnerships, Canadian processors make another call to Tokyo, Seoul, or Manila to discuss increasing volumes. The shift is not dramatic yet. It does not need to be. Even a 5 or 10% reduction in Canadian frozen potato exports to the United States would create significant supply tightness for American fast food chains. Because domestic United States frozen potato production cannot easily scale up to fill gaps. The United States produced 2.2 million tons of frozen potatoes in 2024. Canada produced 1.8 million tons. But Canada exported 1.4 million tons, while the United States exported only 935,000 tons. The United States is increasingly a net importer of frozen potato products for 5 consecutive years now. Import volumes have grown, while export volumes have fallen. That import dependence is almost entirely on Canada. 86% of United States frozen French fry imports come from Canada. The European Union provides 13%. There are no other significant suppliers. So when Canadian supply shifts even slightly toward Asian markets, American fast food chains face a problem with no easy solution. Let's talk about what this means for the chains Americans eat at every day. McDonald's alone serves approximately 69 million customers globally each day. A substantial portion order French fries, arguably the most iconic menu item the chain offers. Industry estimates suggest McDonald's United States locations alone serve millions of pounds of French fries daily. Wendy's, with its fresh-cut fries, still depends on processed potato supply for consistency and quality control. Burger King, Five Guys, Shake Shack, Arby's, Culver's, Freddy's, every major chain has built customer expectations around reliable access to high-quality frozen French fries. Now, imagine Canadian supply to the United States drops by just 10% due to processors redirecting volume to Asian buyers. Where do American chains source that 10%? Domestic production is already running near capacity, serving existing food service and retail demand. Building new processing facilities takes years and hundreds of millions in investment. European imports are possible, but expensive shipping frozen products across the Atlantic costs far more than trucking them from Alberta to Montana. The likely outcome is straightforward. Supply gets tighter, prices increase, and fast food chains either absorb higher costs or pass them to consumers through menu price increases. In markets where customers are already price sensitive due to inflation, higher prices mean lost sales and reduced traffic. Or worse, supply constraints force menu limitations. Imagine McDonald's limiting fries to small sizes only during peak demand periods. Imagine Burger King implementing portion controls because supply is insufficient for projected customer volumes. These scenarios sound absurd until you understand that 91% of frozen potato imports come from a single source that Trump is actively destabilizing. But here is the crisis within the crisis that will take longer to manifest but could be even more devastating: seed potatoes. According to Agriculture and Agri-Food Canada, Canada exported $50 million in seed potatoes in 2023 to 2024. 96%, $48 million went to the United States. Seed potatoes are not optional. You cannot plant commercial potato crops without certified seed stock that is disease-free, genetically suitable for specific growing regions, and optimized for processing requirements. Canadian seed potato producers, particularly in Prince Edward Island, New Brunswick, Alberta, Manitoba, and Quebec, supply the majority of seed potatoes that United States farmers depend on. If tariffs disrupt seed potato trade, it does not just affect imports of finished frozen products, it threatens United States domestic potato production. Farmers cannot plant crops without seed. Reduced planting means reduced harvests. Reduced harvests mean less supply for American processors who are already facing Canadian import constraints. This is the nightmare scenario. Tariffs hit Canadian frozen potato imports immediately, reducing supply to fast food chains. Simultaneously, tariffs disrupt seed potato imports, reducing United States domestic production for future crop years. The entire supply chain gets hammered from both ends. And seed potato trade is particularly sensitive to timing. Planting windows are narrow based on climate and growing season. If seed shipments get delayed by tariff disputes, farmers miss planting windows entirely. That means zero production for that year. Canadian seed producers understand this vulnerability. If American markets become unstable due to Trump's chaos, they can explore partnerships with other countries that need high-quality seed potatoes: Mexico, South American nations, emerging markets in Asia. The relationships that have made United States potato farming viable for generations could be redirected because Trump could not maintain a stable trading relationship. Now, it is important to acknowledge that claims about dramatic immediate cuts to Canadian potato exports have been debunked. In August 2025, fact-checkers confirmed that while exports to the United States did decline between first and second quarters of 2025, those fluctuations are not unprecedented. From January to March 2025, Canada exported 512,621 tons of potatoes to the United States. From April to June, that dropped to 427,467 tons, a decline of 85,000 tons, or roughly 17%. Agriculture and Agri-Food Canada spokeswoman Stephanie Blais explained, "Fluctuation in trade occurs for various reasons. More time is needed to understand the true impact of the United States administration's tariff policy." She also noted that Canadian agri-food exporters base their decisions on market needs and dynamics, and available data for 2025 does not show an overall increase in shipments to Asian markets. So the dramatic pivot has not happened yet. But, and this is critical, the conditions for that pivot are being created by Trump's policies. Canadian processors are having conversations about diversification. They are reducing contract volumes for 2025. They are exploring Asian partnerships. The fact that the full pivot has not occurred yet does not mean it will not occur. It means we are watching the early stages of a supply chain restructuring that will accelerate every time Trump threatens new tariffs or creates new chaos. Here is what keeps procurement executives at major fast food chains awake at night. This is not a temporary disruption they can wait out. This is the beginning of a structural shift in how Canadian potato processors think about their business. For decades, Canadian processors could assume American markets were stable, predictable, and growing. They invested hundreds of millions in capacity specifically to serve United States quick service restaurants. Those investments made sense because the trading relationship felt reliable. Trump destroyed that reliability. Now Canadian processors are asking themselves, do we want 70, 80, 90% of our business dependent on American markets that could face arbitrary tariffs at any moment based on a president's social media impulses? The rational answer is no. Diversify. Build relationships with Japanese buyers. Expand partnerships in South Korea. Explore opportunities in Southeast Asia. Reduce American market exposure to a level where Trump's chaos cannot threaten business survival. Once that diversification happens, once Canadian processors sign multi-year contracts with Asian buyers, once they invest in logistics infrastructure to serve Pacific markets more efficiently, those changes persist long after Trump leaves office, because business relationships and supply chains are sticky. They do not reverse just because political winds shift. American fast food chains are beginning to understand this reality, and it terrifies them. Because they built their entire business model, their menus, their pricing, their customer expectations on the assumption of reliable access to Canadian frozen potato supply.